Good evening, everyone, and welcome to our Smarter Homebuying webinar. Thank you for joining us this evening. My name is Angela Dennerson, and I'm a Senior Business Development Officer at the Los Angeles Police Federal Credit Union. If you're joining us tonight, you will be getting an overview of the home buying process so you can make informed decisions. We will touch on purchase options, key decisions, and other important things to think about during your purchase. Whether you're buying your first home, a move-up home, a vacation home, or a retirement home, this may be the largest financial commitment you'll ever make. Before we get started, I'd like to mention that this session is a live webinar and a recording of it will be sent out shortly after. You will be in listen-only mode, but our presenters will have dedicated time to answer your questions towards the end of the presentation, and we encourage you to ask them along the way by typing in the Q&A box in the bottom right corner of your screen. So now I'd like to introduce our presenters for the evening. Tori Wilson, she is a client success specialist for HOMEAdvantage. Tori has been with HOMEAdvantage for 4 years, previously working on the member concierge side, helping members with their home buying endeavors. Now she focuses on managing client relationships and offering support training to those clients. Tori has worked with many credit unions across the country, helping members save money when they buy and sell real estate. Also joining us tonight is Cesar Melendrez. He's a real estate consultant with Jason Mitchell Real Estate. Cesar has 11 years of experience with expertise in buying and selling real estate in LA County. He focuses on providing clients with exceptional service, accurate information, and careful guidance so his clients can make the best informed decisions. Our LAPFCU presenter is Veronica Mauskowitz. Veronica has been a mortgage operations manager at LAPFCU for over 8 years. Prior to that, Veronica's experience working in the mortgage industry spans over 3 decades, although it doesn't look like it, including overseeing national operations for some large companies. Please join me in welcoming our presenters this evening. And now I will turn it over to Tori.
Good evening, everyone. Thank you for the introduction, Angela. Again, I'm Tori Wilson, Client Success Specialist with HOMEAdvantage. My contact information will be up on the screen. If afterwards anyone has any questions about the HOMEAdvantage program and would like to reach out, I will go ahead and go over our agenda for the evening, and then I will go into some details in regards to HOMEAdvantage. So tonight I'll discuss all the information that has to do with the HOMEAdvantage program, joining the program, the great benefit of using the HOMEAdvantage program. I will have Cesar talking about making the decision to buy, selecting a real estate agent, the purchasing process, finding the right home, and then we will also have our mortgage expert from the credit union talking about the market trends and the financing options and how to qualify. All right, so HOMEAdvantage. We pretty much try to make HOMEAdvantage a one-stop shop for the credit union and the credit union members, one-stop real estate resource for you. We do have a co-branded site with the Los Angeles Police Federal Credit Union. If you go onto their site, you'll find the MyCU HOMEAdvantage site there as well. There is where you can search the home listings in the MLS portal. You can send up alerts, you can like properties on there, you can save properties to come back at a later date. You can put your search criteria in there and it'll send you homes that relate to that criteria whenever they come available. We also have a great concierge team. Once you get registered into the program, the concierge team reaches out to you. They make it very convenient. whether it's through text, email, or phone calls, whatever you're comfortable with, the concierge team will be there to walk you through the entire home buying and selling process from the beginning to the end. Any questions that you may have, any concerns that you may have, they're really great advocates throughout the entire process. You'll have access to an exclusive network of dedicated agents who specialize in law enforcement community. We have one of those dedicated agents here with us today, so it's very exciting. You can go on there and view those agents' profiles, read their bios, and see who you think you'd like to talk to. It's just a great selection of agents, and they're really amazing. I've been working with them for over 3 years now, and I get a lot of great stories on how our agents have helped the credit union members. And the great thing about it is the HOMEAdvantage program is free to you to use. The only thing you have to do is work with one of our amazing agents that is a part of our network, and in the end, you earn cash rewards. So kind of give you a little bit of an example. If you're looking to purchase, let's just say, a $500,000 home, and your agent's commission is 3%, you will get 20% of that 3% back at closing, which is great because it can be put towards your closing cost and reduces your out of pocket. And like I said, it's free, and literally the only thing you have to do is work with one of our agents. So if you guys do have any questions on how the program works, how the benefit works, it is on both the buying and the selling transactions. Please feel free to reach out to either myself or someone at your credit union, and we can give you more information on the program. All right, so I'll go ahead and turn it over to our amazing real estate agent, Caesar.
Good evening. Thank you, everyone. Thanks, Tori. Appreciate it. My name is Caesar Melendres. I'm a local real estate agent. I'm super excited to talk to you about the home buying process. I know in the last couple of months, there's a lot of concerns about the economy, inflation. So this is a great place for you to kind of get more information regarding the current market. All right, so part of buying a house is making the choice, right? Am I ready to buy? So we'll discuss some of the pros and cons regarding renting versus buying, how steady income plays a huge role in your purchase loan, some of the different down payment programs that are available to you. Of course, interest rates is a hot topic right now, how inflation and the current economy affects interest rates currently, and reasonable prices. How's the housing market? Have prices gone up? Have they gone down? I'll tail it off. So we'll get that more in detail. All right, renting versus buying. So we know that when you're renting, obviously that you have the freedom to move, to get up and move. And obviously there's no tax benefit. Keep in mind when you're renting, you're paying 100% interest, right? So there is no benefit whatsoever. The plus side is there's no responsibility. We know that the landlord has to upkeep the property and have to maintain the expenses. What's happening, I've seen a lot in LA County, a lot of landlords are increasing rents, right? So it's forcing tenants to basically relocate, being that rents are on the rise every year. And of course, there's property restrictions, only what you can do with the properties there. Now, when you're buying a house, actually, it's harder to pick up and move. So it does require commitment. The average home buyer that buys a house stays in their homes for about 7 years before they actually tend to sell again. There's major tax benefits when you're a homeowner, especially during the pandemic when you were forced to work from home. You actually write off the living space in which you worked in, so it's a neat little write-off. Of course, there's more responsibility, upkeep, and maintenance is part of home ownership. But the trade-off is the equity. You could definitely leverage that into potential wealth and other properties. So again, that's just part of ownership. It does require a little bit of work, but in the end, the equity will basically help you with leverage other properties to kind of grow your wealth as time goes on. Steady income. So the lender requires 24 months of steady income. So it's very crucial that you document as much as you can on the income because your income will dictate basically how much of a purchase you can buy. Unless you're paying in cash, a lot of investors nowadays are using cash to buy properties. So it's very important to make sure you document as much income as possible to help you qualify for that home. So you decided I'm going to buy a house. Okay, where do I start? Well, number one is location, right? So find something that fits your lifestyle. So ask yourself, where do I want to be nearby? Is it by the ocean, by the canyon, mountains? Are you more of a city person? So kind of think about exactly where you want to be. Okay, so location is everything. and make a list of something of the features you want in your house. So think about what type of condition. Do you want a nice home that's remodeled, or do you want a project? Get a house that's basically a fixer-upper and make your own custom finishes, and drive around the neighborhood, see what kind of a community you could possibly live in. And of course, you can definitely search online. Part of the HomeAdvantage offers a portal, which is a great site, all resources, real estate, looking for properties on the market. There's some tools, calculations for mortgage payments and whatnot. I really encourage the HomeAdvantage website because third parties like Zillow, Redfin, they tend to sell your information, right, and steer you in the wrong direction. So with HomeAdvantage, it's all insulated. They do not sell you information, so it's a great resource. Everything that's all real estate related. All right, so we're touring properties and you find the one, right? Let's make the offer. Again, working with the HomeAdvantage agent will provide huge value, especially consulting with you on the property itself and how to make an offer. Your agent will provide comps, basically telling what the values are going for in that specific neighborhood. You will definitely want to get pre-approved with the credit union before you shop. And this is very important. You want to get pre-approved because this will give you confidence in buying a property. When you have steady income, you have potential for job growth and higher within your department, you make more money. It gives you confidence to buy a house. And you're more confident out there putting in offers. Again, your agent will consult with you regarding offers, how much to offer, what's considered too low, too high. Um, the market is competitive, so be prepared for counter offers. I've noticed in LA that properties that are remodeled with new kitchen, new bathrooms, they tend to be more competitive, more buyers. So you might be in a multiple bidding situation. So be prepared and factor in your cost when you're putting offers like that. All right, the purchase process. So you found the right home and your offer gets accepted. So you're gonna make a deposit. Essentially, the seller will keep the property off the market, and then you will open escrow. Escrow is a 30-day process from start to finish. They are the third neutral party of the transaction. You will receive escrow instructions. Basically, it's a mirror of the purchase contract of confirming the terms, price, and whatnot. And escrow will coordinate the closing with you. Basically, they'll work with your lender, insurance company, title companies to make sure everything in compliance in your home process. Okay, again, working with an agent, a HomeAdvantage agent, there's quite a bit of paperwork. So again, get with your agent, discuss some of the contract terms, some of the verbiage, the contingencies. It could be very overwhelming at first, but they're here to help you guide you, make clarity of the transaction itself. You'll receive also estimated closing costs. Bear in mind that when you're buying a house, it's two things. It's your down payment plus your closing costs. Closing costs means what the lender is charging for the financing. Being that you're part of the credit union, there's also cash rewards benefits free to members such as yourself. You do get a rebate on the commission, on the earned commission towards your closing costs, which means less money out of pocket for you, and it creates kind of a win-win situation. An appraisal will be required as well to make sure the property matches the offer price on the appraisal. Home inspections are very important, especially again in LA. You'll see a lot of homes that are remodeled. You want to make sure the property's in good condition. Some examples of inspections are termite, sewer, roof. So you will basically get a good indication of the condition of the house because on photos online, you can't really tell the condition till you actually physically walk the property. And then your lender will work with insurance. And of course, documents nowadays are so convenient to sign digitally, can be signed on your phone via DocuSign. So very convenient, very hassle-free way to kind of get your documents signed and whatnot. And then once escrow confirms with the county as you as the new legal owners, then you'll get the keys and you actually move into your new house. All right, moving up or buying a second home. I see a lot of this with our credit members where they have a house already, they outgrew it, looking to upgrade in a better area. So this is the power of leverage. We can actually use your home to upgrade to a bigger house using the equity or possibly maybe invest in other properties. One of the best ways to build your financial wealth is through rental property. I encourage to buy multifamily. A great way to get positive income, set for retirement. And we all know properties appreciate quite quickly in California. So it's a huge way to really build your wealth over time. And of course, buying a vacation home is also a good thing. With the invention of Airbnb, you can rent out your place when you're not there in off-peak seasons. So again, a great way to kind of build passive income as you build your portfolio and create your own financial wealth. So those of you looking towards the future, retirement home, a lot of the factors regarding retirement is to be near their kids or grandkids, right? So you have a big empty nest where the kids have moved out, they've gotten married, so you got a big house. So downsizing is quite common, or possibly tired of walking down up and down the stairs, right? It's a big motivating factor to basically downsize into a smaller home that's more convenient for you. And of course, active communities is a great way also to look into retirement. One of my goal is to live in a golf community, right? So I can be in a golf cart around my neighborhood, right? So it's a great way to be active in the community. Current market trends, what will this year market look like? Again, this is a very touchy subject. We know with the current inflation, what's going on with the economy, Ukraine, a lot of world factors, like we really don't know what's going to happen. I was fortunate enough to sit the lecture with an economist, and one of the key takeaway was that we're heading into a correction, not a crash. So they're projecting things will basically tail off. Inflation has gone down somewhat since the Feds have raised the rates recently in the last 6 months. So we do see a little bit of cost going down. So what that means for future interest rates, no one really knows. But again, this is a question to ask yourself. You are in charge of your own economy. Like I said, if you have stable income, it's sustainable, you have potential to get promoted within your department, that is the best time to buy, regardless if the market is up or down. Right, lender consideration. So when working with a credit union, lender basically someone that you work with that's reputable, of course, someone that's responsive, not only just to respond to you, but actually understand where you're coming from, what your goals are, what your plans are, to make sure that they have best interest in mind, right? They want to help you guide the process, make sure the finances are in place to help you with what's required as far as down payment and costs and whatnot. Okay, and of course, the more experience, the better. You want to work with somebody that's been through the up and downs of the market, to have a wealth of knowledge that will certainly guide you the process, again, regardless of how the economy is. This ends my portion of my webinar, but again, I'll stick around towards the end and look forward to hearing from Veronica.
Hi. Well, now that you know everything about the purchase process, I will begin talking about how to prepare you to get a mortgage loan. So some of the things that we're going to be talking about today, and I'm sorry about the background noise. Some of the things we're going to be talking about is the pre-qualification, the difference between a pre-qual and a pre-approval. I'm going to cover mortgage PMI, mortgage insurance, and loan to value requirements. I'm also going to cover debt to income ratio and how to calculate that, FICO score tips, how to get your FICO score up, and then I will also cover the LAPFCU loan programs that we currently have. So basically the difference between the two is a pre-qualification is where you complete an application, we take the income that you state on the application and we qualify you. We pull your credit report and we basically let you know whether you qualify for that sales price. This is a great time for you to talk to our loan officers. We want to get you ready and getting your FICO score where it needs to be to let you know what we need for a down payment. And the great thing about a pre-qual and a pre-approval is that it's good for 4 months. So there's plenty of time to fix what you need to fix and we can refresh it and get you ready for that pre-approval. The great thing about the pre-approval is that it's a firm commitment from us. So with a pre-approval, we are asking for income documentation, your bank statements. We are making sure that if you noted that you have overtime income or bonus income, that we're able to average it for 2 years. So that's really important to consider. So I would not note that you have overtime or bonus unless you have a 2-year history of that. And as Caesar stated, we are looking for a 2-year work history. This question is asked often, does my FICO score drop every time I pull it? So in the industry, whether you're buying or doing a loan, you can pull your credit report as much as you need to with lenders for a 4-month period without your FICO score being affected. So I verified that with Experian, TransUnion, and Equifax, and they all confirm the same thing, that it will not lower your FICO score. So use that time to play around and see what you need to do to get ready. Next slide. So if you're not able to put 20% down, and it's so difficult, especially here in California, don't worry. We have mortgage insurance that is able to assist in that. And it's not a bad thing. You know, people try to avoid PMI. It's required to keep for 7 years, but as we've seen in the past, values tend to increase pretty nicely in California. And so once you can prove that you have 30% equity, we will order an appraisal, and you can get it removed. And so we see that often. We don't see a lot of instances where they have to keep it a whole 7 years. So unless you do an FHA or VA, those are for the life of the loan that you have to keep your PMI. With conventional loans, you do not have to. So don't steer away from, you know, I don't have the 20%. If you have 10%, it works. So utilize that. The loan to value calculation is described at the bottom here. And it basically, if you don't have 20% down, that's when you need the mortgage insurance. Next slide. Okay, so these are the things that are really important in working with your credit score. So obviously pay your bills on time. I like to recommend that you set up most of your bills on auto pay. And this way, if you're vacationing or life gets really difficult, at least the minimum is paid. And so you don't have to worry about even running into a 30-day late. And a 30-day late can drastically affect your FICO score. So try to do that, and so that it helps you. Also, maxing out credit cards. So the way that the FICO score is driven is they take a look at your total credit line and what is unused, or I'm sorry, opposite of that, what's used on your credit cards. So try not to max it out, because that does affect your FICO score. Also, during a loan, during the loan process, don't take out new debt. That is really painful. We see that at times, and I understand. You know, you're like, I needed a washer and dryer, and so that blew the deal. And so we then have to work through your recalculating your debt to income ratio. So no purchases during that time period where you're shopping for a home. And this is an oldie but a good one. So keep your oldest credit card open. That tells us how long you have had credit and how diligent you've been with your credit. So keep that open. Even if you don't use it, keep it open, and that helps your FICO score as well. For a first-time home buyer, the FICO score that we're looking for is somewhere between 680 and 700, and that's for a first-time home buyer. Okay. So some of the things that we're going to be talking about today they have to do with acronyms, and it's important for you to know the lingo, because in the industry you're going to hear PMI, DTI, LTV, and you can be a pro by the time you get ready for the loan process. You can say, hey, I know what that means. So the debt to income ratio that we're looking for is between 42 and 45%. And that's your total debt over your monthly income. So I did a little calculation here so that you can practice and see where you fall. So what we do is we take your debt, your monthly debt, and it's not your total debt, it's what you pay monthly. So add all of that up. We're not including your cell phone bill or any utilities. It's basically what comes through on a credit report. So we take that, we take what your what we're forecasting that your mortgage payment will be. And we're including the principal, the interest, hazard insurance, property taxes, HOA if it's a condo, or a PUD, and your PMI if that's what you need. So we take the debt and your monthly mortgage payment and we divide it by your gross monthly income. So if you do that, you can see what your debt to income ratio is, what that percentage is. So if you're over the 45%, for example, the example that I used, the monthly debt was 48%. So your options to lower that, to get it into that little box that we need it to be in, is to either work with your agent and lower the sales price. You can work really hard to try to get your income increased, maybe a promotion, or lower your debt. So those are some of the options to get your DTI to 45%. Next slide, please. Thank you. So we have just about all programs except for FHA and VA here at LAPFCU. We do primary residence, second home, investment. We have every fixed product you can think of. We do a 5-5 arm, and that's where it's fixed for 5 years and then it adjusts every 5 years. And that program doesn't have PMI, and it goes up to 90%. So if you're interested in that, give us a call and we'll talk about the interest rate for that. We also have a 5-1. The 5 is fixed for 5 years and then it adjusts every year. Same thing, no PMI. And that's our proprietary products. So those are two very popular programs that we're doing at the moment. We do large loan amounts up to $2.5 million. And we also do equity loans. So if you're a current homeowner and you're looking to expand your home, build a pool, we see people taking equity, our members taking equity out of their homes right now and looking at purchasing a second home. So there's a lot of options that you can that you can work with when you look into a HELOC or a fixed equity loan, and those go up to 80% loan to value. We on top of that, not to go back to that slide, but we also do a 3% down payment program. It's for first-time home buyers, and that's a great program if you're looking to put some money down, and it's exclusive for first-time homeowners. And we lend in all 50 states. So if you want to buy a property in Idaho, Tennessee, those are really popular right now, those states, Texas, Arizona, we lend in all 50 states, so you're in good hands. We also, I love this program, we also have the Heroes Home Loan Program, and this is exclusive for active duty sworn and civilian law enforcement personnel. It's 100% financing, so we lend the entire sales price. There's no down payment. There's no mortgage insurance. We do a 30 or 40-year fixed rate option, and this program is for California properties only, and it's for owner occupied. So for a first-time home buyer, the qualifications for that is you can't have owned a home for 2 years. So that's pretty exciting. And that completes my my session. I also want to, before we go into this homeowners insurance screen here, I want to invite you to dabble in Fannie Mae's website. There's so much great information if you just Google Fannie Mae home buyer programs or first time home buyer. There's so much information. They really spend time to educate a home buyer. And so so if you have time to look into that, but always feel free to call us. We're here for you. We love to talk about mortgages and go into home purchasing. So feel free to do that at any time. Thank you for your time tonight.
Thank you so much, Veronica.
Oh, you're welcome.
So bring up insurance. If you are financing a home, homeowner's insurance is mandatory. With so many options to choose, we wanted you to be aware that the credit union has an insurance coordinator available to you. Maria Asensio with LAPFCU Insurance Services. Her information is on the screen. If you want to take a picture or write it down, please take her information down. She can provide you with different insurance options to fit your needs. So I want to throw that out there. And then I also want to bring up another thing LAPFCU offers that no other credit union or bank would offer for our active duty sworn and civilian personnel. It is the end of watch debt protection insurance. This is a complimentary insurance that the credit union provides. God forbid something were to happen and you were killed in the line of duty, it will pay for the loans financed with the credit union up to $850,000. It covers up to $400,000 per loan. So if you have your mortgage, your home equity, cars, all of that would be covered up to $850,000. One less thing for your family members to have to worry about in a tragic situation. So we wanted to make sure everyone is aware of this service. You can contact us to see you have a current loan, to see if you have it now, but we did want that to be aware for everyone. So I think we covered everything. Know some people have been asking questions throughout, but if you have any other questions, please type them in the Q&A. I'm going to go to the first question, and this is going to be for Veronica. What about a HELOC loan versus an equity line of credit? What are the difference between those two? You're on mute.
Sorry about that. So the HELOC is an adjustable loan. But the beauty of a HELOC is you take out an entire credit line. It's almost like a credit card, and you only pay interest on what you're using. So if you take a loan for $100,000 and you want to build, you want to redo your bathroom, and it's going to be, I was going to say 10,000, but that's pretty funny. Let's say 20,000 with the cost of goods now. So you're only going to pay interest on that 20,000. And then when you pay off that 20,000, then you have the credit line of 100,000 again that you could use at a later time. And so if there's no balance, there's no interest to pay. The home equity loan is a fixed amount. So if you request $100,000, you get the entire $100,000 up front, and you have to pay principal and interest. So if you're not ready to remodel your home, you don't want to pay interest. But if a fixed program works and makes you more comfortable, then that one would be for you over the HELOC.
Thank you, Veronica. Next question, again for Veronica. Does the HEROES program still apply if there's only 1 year of work experience?
So we need 2 years. It's a minimum of 2 years that we're required to verify. If you were in, so say you were in the academy, we would count that time in the academy. So that could help with the 1 year experience, because we will account for time that you were educating yourself, but it's a 2 year minimum.
Thank you. Okay, this is for Caesar. If I need to sell my home and buy a new home, will that affect the seller if they want to wait for me to sell my current home?
That's a very good question. A lot of people that have homes now are upgrading, and of course, they can't do that unless they sell their current home. So yes, it can be somewhat complicated. The more reason why you want to get a really good get your agent and kind of formulate a plan and set the proper expectations. So if you're out there putting in offers, but it's contingent on you selling, make sure you communicate that with the agent and get a plan in place and say, look, if I put an offer in, please give me a certain amount of days to put my current house in escrow. So make sure you have a plan in place and set the proper expectation. Let the other party know, hey, these are my plans, and here's what we're trying to do a concurrent closing, meaning that you must sell in order to buy the replacement home. So yes, very good question. It's a little challenging, yes, but it can be done. This is why communication is key and setting the proper expectations with the other party.
Thank you, Caesar. Another question, who chooses the escrow company?
Very, very good question. So it's completely neutral. It's all negotiable. It could be seller or buyer, but typically in a seller's market, it's typically the seller that chooses the escrow company.
Another question, is there a higher interest rate percentage if you buy a second home or a vacation home? Or as a vacation home, sorry.
It's a very question. The question is if your interest is higher if you're looking to buy a second home. Is that the question?
Yes.
I think it's more for Veronica.
Yeah. So, there's a base interest rate that that we display on our website, and then once you start keying in elements of what your needs are for that mortgage, it'll price accordingly. So you can play around with our website and do that. It's an investment property where you're going to pay additional points. With a second home, it's going to be based on your FICO and loan to value. So there's different parameters based on your loan to value, your debt to income, and your FICO score. So it's hard to answer because we need to pull your credit report.
All right, next question is, actually, let's see. What are mortgage points?
Mortgage points are characteristics of the loan. So I have the rate sheet in front of me today. Let me give you an example of what those elements are. So as I mentioned, it's your credit score, your loan to value, whether it's an investment property. There is a second home hit. I'm looking at it right now. It ranges, depending on your FICO score and loan to value, it ranges from 1 1/8 to 4 points. So again, it's really important to have a good FICO score. Attempt to put as much money as you can down, but there's so many great mortgage insurance programs to cover you on that. And so basically that's what it is. It's kind of an adjusting box as to what the points will be that you have to pay based on your characteristics of the loan.
Thank you. How long does it take for LAPFCU to issue a pre-approval?
So we do it, so if it's on a business day, we're able to do it the following business day. If you give us a call and tell us that you're in a rush because you want to go shopping that weekend, we're gonna get to it immediately. And we want you to go and shop for a home. We want you to be able to make offers. So basically, it's within 24 hours.
And how long are the pre-approvals good for?
4 months. And there's one thing that I want to cover real quick. We talk about FICO scores a lot. I just want to let everybody on this call know that we pull all 3 credit bureaus, and we take the middle score. And if there's 2 of you, if there's a co-applicant, we're going to take the lower of the 2 scores. So I know that, everybody's getting real savvy, having apps tell you what your FICO score is. Most of the time, that's only one credit bureau. We have, for mortgages, it has to be all 3 credit bureaus. And so sometimes that makes it really difficult to know exactly what your FICO score is, and we take the middle of those 3.
Someone asked, how much should I put down? But I know that's going to vary per person.
Yeah, Caesar, do you want to cover that? It's what you can afford. So if the more you put down, the more affordable the payment is.
Of course, of course. So in today's market, there's different variations. It all depends on your personal goals and what your budget is. So of course, there's 3 scenarios, right? If you're a veteran, there's no money down, which is great. The opposite is that you could have a higher mortgage payment, right? If you're a non-veteran, the minimal down payment is 3.5% down. Again, you put little out of pocket, but you have a big mortgage payment. So it depends kind of where you're at financially, what you feel comfortable with. For me, myself personally, I like to be greedy. I like to keep as much cash as possible, put as little as possible. So when other opportunities come in place, I can leverage that into different properties. So again, it depends on personal budget and your goals.
Someone asked, does LAPFCU service the loan?
We do. Yeah, we service all of our mortgage loans here in the Van Nuys office. So it's nice to be able to walk in or easily reach us.
What should I bring to my closing?
So if you're closing, would it be for, like
I'm
when you're
assuming
signing
closing the loan.
loan documents?
Mm-hmm.
What should you bring? Definitely your driver's license for the notary. Um, and if you have, if you have money that you have to contribute, sometimes they're waiting for that, your down payment. I'm not sure, Caesar, is there anything else that escrow usually needs at that point?
Aside from cash, typically, as you said, when you sign in your loan documents, of course, bring your ID. Very important. When you're signing documents, verify that your name is spelled correctly.
Yeah.
You have the correct home address. Most importantly, the correct interest rate and mortgage payment. Nothing worse when you're going to close on your house and everything's different, right? Because once you sign, you are committed. So I definitely recommend a do-over on the loan documents and verify again the name, address, interest rates, and your mortgage payments. If there's any discrepancies, do not sign and contact your lender.
Someone asked, when do I receive the deed to the property?
Great question. So typically when escrow records the new owner's name with the county, typically it takes about within, I don't know, about 2, 3 weeks before, but you can get a digital copy immediately. So to answer your question, probably the next business day, but it'll be a digital form. It will not be recorded yet, but typically the next business day.
Someone said, I'm interested in a hero's loan for an owner occupied multiple unit, no more than 4 units in California. Is that possible?
You're really testing me. Okay, let me think about this. I wish my underwriter was here, but I believe we do. So because if you have more than one unit, it tends to go into an investment property unless you're living in the one unit. So I want to say I'm going to have to get back to you on that because I can't remember if we do more than 2 units on that. So I'll have to get back to you.
And we have everyone's email address because you registered, so we can contact you and we will get that question answered. Someone asked, how can we rewatch this webinar after it's finished? We will, this is a recorded webinar, so we will be sending the recording out as soon as we get it all finalized. So that will go out to everyone who was registered for the webinar. Next question, are the 680 to 700 credit scores the general or mortgage scores?
So that's the middle FICO score that I was referring to. So we'll take all 3 of the credit bureau scores and that would be the middle score. The minimum for the middle score.
Somebody asked, my fiance is an unemployed reservist, but can receive a VA loan. I am the primary moneymaker of the home. Do we have to be married to purchase a home? That's one question. And is there a minimum time of being married to buying?
Caesar, do you want to answer that? I can also answer. You don't have to be married to purchase a home together. I'm trying to think of the other questions.
Is the question is that one, they're not married, the one that's not employed has the benefits, the one working does not have the benefits? Is that the question?
No, I think they were just asking if they had to be married, and if they did have to be married, how long before they could
Yeah.
purchase and do the loan.
They don't have to be married, and if one is not employed on the application, they can just put 0. We have homemakers that are on the application and they don't have any income. So there's the good and bad, right? When you have a co-applicant, you hope to gain their income so that you can qualify because it goes into your debt to income ratio. If you want them on a loan but they don't have income, you can continue to have them there. But then we also take their FICO score. So that's where you have to make the decision. Is it the income? How's their credit? Because they can make or break the loan. So, and we can help you through that. If we pre-qualify you, we'll pull both of your credit reports and we'll tell you what you should do based on what we see. And you can always, so if you want somebody to be on the property, they can be on the vesting. They don't necessarily need to go on the application and be on the promissory note. So you can add them later.
Next question. Are there mortgage loan, HELOC, or home equity that are interest-only payments?
That's such a good question. So currently we're working on rolling out a interest-only HELOC. It should be ready at the mid-year and end of the year. And it's going to be a 10-year interest only where you can draw from the loan, and then it stops where you can no longer draw, and the rest of the 15 years is to repay, and then it's principal and interest. But during that time that you draw, it's interest only payments, and so that's helpful. So that's to come. We're going to add another HELOC.
Good news. Let's see. I am an LAPFCU member, not my husband, but he is the one with the steady income. Would we be able to use the HOMEAdvantage program through LAPFCU?
So the HOMEAdvantage program is with Caesar, and there's no qualifications for that other than being a member with us, and then you're able to access the information from our lapfcu.org site. If you go into home loans and home loan, there's a box that's available with the information and the links for to apply for a mortgage loan with us. Only one of you needs to be a member, and it doesn't matter whether it's the primary or the co-borrower, but one of you needs to be a member.
Next question. Are officer next door programs available and are they worth it?
I'm not familiar with that. What is that called again?
Officer next door programs?
Is it for law enforcement?
Mm-hmm. It's like something if they purchase a property in the city they work, there's something dealing with that. Caesar,
Okay.
have you ever?
Yeah, so essentially, Officer Next Door is basically a program where they'll give you 100% financing being that you're an officer. The restriction is limited by zip code. So it's not like you could pick where you want to go. It has limitations as far as zip code and area. But definitely it's a good program depending upon exactly where you land. So it's for officers looking to purchase a distressed home. Typically, it's simply a home that's either in bad condition at a huge discounted price. They give you the full financing. Again, I think it's limited by zip code or by area, but it just depends if it's worth it or not. If you get a good property for a great price, even if the area is kind of sketchy, we know that properties appreciate in value, so it's something to consider.
Thank you. Next question. If you have a home and a vacation home / Airbnb, would you recommend pulling a loan from your home you own or your Airbnb? Airbnb is paid off. Our home, we owe $700,000.
Great question. I would do the Airbnb because there's no debt. So whatever money you take out of the Airbnb, it will be repaid by your guests that stay in your home. So the less debt, there's more value in the home, more to pull out. And with the power of leverage, you can buy your second property, a multifamily, another Airbnb. So the one with zero mortgage is the best option to go because the guests that are staying at your Airbnb will pay for your new mortgage.
I was able to pull up the Heroes program, the Home for Heroes program, and it is a 1 unit only. So we don't do multiple units for that program.
Someone asked, is the officer next door program for civilians as well?
I believe it's limited to law enforcement only.
Sworn officers.
Sworn office, correct.
Does age matter when taking out a 30-year loan?
Absolutely not.
Where can I get more information regarding Officer Next Door program?
Very simply, just Google that, and then you'll see the actual website, the main site there. And then from there, you can do some of the research as far as the qualifications, what's required. Definitely the power of Google. I don't know the site offhand, but if you insert that in the search task menu, you'll definitely find the information that you're looking for.
That was the last question on here. Does anyone have any more questions they want to put in before we end early?
I'd like to add something for our listeners. Don't shy away from the current interest rates at this time. If you take a look and you've been watching the market, you can see that prices are starting to shift. And so take advantage of that. I think it's awesome to be able to get a great deal on a property because rates fluctuate and you'll be able to refinance at a later time. You know, it's great to be able to get a deal.
That's a
The
great.
rates really, yeah, the rates are not, they're not extremely high, but look at it this way, it's temporary. They'll go back down and you'll have your home and you'll be able to refinance.
That's a very good point. As an active agent, we know that the rates are not as low as they once were, but remember, you can negotiate and have the seller buy down your interest rate as well. A lot of homes are just sitting in the market. Here's a tip for you. If you see a house in the market for 30 days or longer, sellers are willing to play ball, right? There's no offers, no activity. They just want to unload the property. So that's a prime time to negotiate for the seller to actually buy down your interest rate, which costs you nothing, and you get an attractive rate paid by the seller.
Yes, it's a buyer's market. Go get it.
I have another question. I have a paid off vacation home. My home I live in is, I owe 700,000. I'd like to buy a rental. Should I pull from my home or my vacation home I paid off? I think Caesar, you answered that.
Yeah, so of course the one with the no debt, you want to use that.
To purchase another
Yeah,
home.
and then have the guest from the Airbnb pay for the new mortgage, correct?
Another question, is it better to sell your current home before you go buy another one?
It really depends what your goals are. Are you looking to buy a bigger home? Are you downsizing? Are you upgrading? It really depends what your goals are. I always say that you hold on to real estate. So if you bought your first house and you outgrew it, do what you can just to keep it, put a tenant in there, and then buy your replacement home. Now you got two properties and just kind of multiply over time. That'd be my recommendation. But of course, if you're looking to buy a large home with a bigger price tag, then you may need to consolidate and liquidate your home in now. So again, it just depends upon where you are as far as financially and then your comfort level as well. But ultimately, I think the name of the game is to when you buy something, hold it and then just rinse and repeat.
Good one. All right, doesn't look like we have any more questions. Tori, is there anything you wanted to add in there?
No, I would just say, to add on to what Veronica and Caesar were saying, as far as, don't be afraid of the interest rates right now. Along with that, I mean, don't be afraid to, go over and use the HOMEAdvantage program. Again, it's free for you guys to use. All you have to do to take advantage of the benefit that we offer is work with one of the real estate agents that is a part of the program. I know Caesar can give you some more information if you get with him and ask him some questions on how everything works. You can also feel free to reach out to me, but the credit union has been giving a lot of money back to their members, and I'm sure they would love to add you guys to that list as well. So those cash rewards are there for you guys to take advantage of. And with the way things are right now, I mean, that'll definitely be helpful at closing.
Yeah, and I know there's a lot of questions around that next door program, which I'm going to definitely look into. But also take a look at our Heroes Home Loan program. Again, it's 100% financing. You don't have to put anything down except for your closing cost, and that can be a gift. So essentially, it's no funds that you have to produce at the time you purchase the home. And also we do a 40-year term, so that makes it more affordable because you can extend the term of the loan to help you with your mortgage payments. So definitely look into that.
And I also wanted to mention, like Veronica said, our mortgage officers, they're here to help. So before you even apply, you can talk to someone in our mortgage department, and I would say they can run numbers for you so you have an idea of closing cost and payments and all that kind of stuff. Looks like we got one more question added at the end. You have programs for officers or first-time buyers. Do you have a program or great offers for buying rentals?
So all of our programs that we have, you're able to do rentals except for the Heroes Home Loan. So yeah, if you're interested in a fixed in the ARM, give us a call and we'll go over what you need to do to be able to buy an investment property. With an investment property, you need to qualify for that mortgage as well as yours until you build the rental income. So they're a little tougher to get, but we can help you through it.
Good, Veronica. Thank you so much. I think that concludes our home buying webinar. Thank you so much for joining us. Again, we will be sending the recording out for everyone who is registered. And everyone have a good night. Be safe if you're not home yet.
Thank you.
Thank you.